This is Jill Rousseau Foster. In this week's edition of my newsletter, I want to talk to you about three different types of loans. Loans that I would suggest you do anything to avoid. The first one is payday loans or pay advance loans. What it is you are borrowing money today short term against your next paycheck. So it's a real short-term loan. It's a week, 2 weeks, 15 days at the most. But when you amortize out the interest, you're paying quite a bit. And a majority of the people that do these loans can't afford to pay it back because you need your next paycheck for whatever bills. So it becomes a run-on type of thing that lasts extremely long, is a high-cost loan. Second type of loan are balloons. Most loans are fully amortized, which means if you took out a loan for 5 years, you'd be making equal payments for the 60 months of the 5-year terms, and at the end you'd have it paid off. Well, a balloon loan is totally different. What it is you'd be making those payments for the 60 months, but at the end of the term, or whatever your term is, you would owe a huge payment, therefore the name balloon, because you'd pay it off and then you'd owe hundreds, thousands of dollars more because you aren't fully amortizing the mortgage with the payment amounts you're making. And the third type is rent to own. We've seen those commercials. There's quite a few companies that do it, but by now you make rental payments, so you're paying a portion of that item, the furniture, the computer, whatever it is, but you're getting it now. There's no credit checks required, so that may be tempting to some. But what happens is you are paying, and when you figure out how much you're paying each month, you're paying substantially more than if you bought the purchase, sometimes 3-4 times the amount of making the purchase. So for good finance's sake, buyer beware, understand the terms before you sign agreement, and try and stay away from these types of loans. Until next time, this is Jill Rousseau Foster.